Okay, hello, good evening, everyone. Sorry for the late start. I suppose, and it's one day late. Okay, it's supposed to be a Sunday market pre-market. Okay, Sunday market prep. So right now we do it on Monday. It's not too late, but it's a bit off the schedule. I'm so sorry about this. All right, so this week, Sunday onwards, everything will be back to normal. All right, so let's take a look into the market here today. So basically, right now, I think a lot of people in the market, you are getting worried about it because you think like, oh my God, the market has been going down for continuously 2 days. Look at KLCI is down to like 1,413. Okay, and then you start to think like, oh my God, is this the end of the market and stuff like that, right? So but from my point of view, it's not that bad because if you look into some of the stocks are still moving up higher, especially in the top active list, but of course not every one of them is actually suitable for any of the day trades, not day trades, for short-term trade or maybe swing. So you might be thinking of going in maybe some of the stocks, especially some of those stocks that they have been moving up for the past few months. I believe you have heard and heard a lot of people have been talking about it. Let's say, for example, this one, after listing, the price has been moving up higher and higher. So is it good to actually look into it? But if you look into a 5 minute charts, it seems like there's a bit of strong selling coming in, but of course there are some demand comes in as well. But overall itself seems like what they are doing right now is like selling, buying, selling, buying. Okay, not buying in the sense selling at the same time they mark the price up higher. So from here what we can see is that they still have the intention to mark the price up higher. So I'm not surprised that these stocks will mark higher tomorrow. So you have to be careful about it. But I won't, in the current market, I won't look into any of the stocks that will, for midterm trades, other than some of the stocks that they have the moving house that is going on, then we can look into it. But right now, majority of these stocks, they show sign price are being thrown down, but overall they're still marking up the price. So seems like tomorrow all these stocks they will have a bit of a slight push up. But from what I see here is that it's good for day trading. So if why I say right now the current market is good for day trading, probably some of you might say like, oh, day trading is so high risk and stuff like that. Look into it right now. The market, like I said before, the market has been very choppy, can move up and down, up and down, up and down, moving sideways like that. So if you're going in for short term or maybe mid term or long term, then it's the same thing because the price is just moving up and down. And some of the stocks, the price keep on going down lower and lower. So which, or you can go for today enter and then today take the profit or cut the losses and then get out from it. Tomorrow anything happen into the market crash, is none of your business. So which one is more risky? So trading method, I always say, is not, there's no better or advantage over one and another. It depends on how you apply into it, how you apply it into day trading, how you apply it into short-term trading. So all this you need to know. Okay, so when you know how to do this, then it's much easier for you to do trades in the market. So don't confine yourself. I see that a lot of people in the market, especially some school of thought, they prefer to look into different kind of stocks or holding period or trading method. They will say like that kind of trading method is good. So for myself, I won't say long term is good or short term is good or mid term trade is good or day trading is good. It depends on whether you know when to apply into it. Okay, of course, in the market that is going uptrend or bull market, everything is good. But in the current market, is down bottom, but seems like it's not at the bottom, then we need to know which one to shift into it, because this is how we do day trade. Like for example, if you're a person who always been trading, or maybe you have already retired, then you are looking into the market on and off. So you don't want to waste your time and your money into the market going in and out, in and out, in and out, doing cut loss. So you need to know what kind of trading method works right now, what kind of trading method doesn't work. Okay, so that's why I say right now I prefer myself, my own preference, to go for day trades. So all these are the stocks that they will have like keep on churning the price up higher until a point where we see that they have no intention to mark the price up higher, then it's done. But for these stocks wise, I will try to stay a bit away from it because constantly churning the stocks. Today price just move up and down like this, so it's dangerous. So it's a sign, so better stay out of it. Okay, so overall market, is it that bad? No, it's not that bad. Some of the stock is still moving up higher. So of course, whether you can spot it. So we have a way to spot all this, whether they have the continuation of the price moving up higher. So we have done some of the sharing last week on our webinars session about the top active list. I do some sharing over there. So if let's say you are interested to look into it, you can also go to our website roundandsearch.com and sign up and then log in, go to the video site, then you can watch the recording there. So you have some understanding. Or if let's say you want to learn more about all this price and volume, you can also join our training course. So our training course October intake is coming up. So it's just next week. So if let's say you are still thinking about it, you have no time to think about it, this will be the best trading course that you will attend, because we like what you guys have been looking into it. You know that how we look into the market and how precise we can go, knowing that the market, how it goes before it happens, and then you can see all the trades that we have done. So it's all there, you know that. Okay, so I don't have to promote myself much more about it. And of course, if let's say you want to sneak peek knowing what kind of things that we are looking into it for the training course, you can join our webinar. The upcoming one will be on Wednesday, is it? Or should be on Wednesday. Check on our Facebook. Okay, so yep, this is our training course here. So that's a bit of sharing about it. So let's come back to the market first. So right now we know that those stocks that they want to mark it higher, so you will continue to mark the price up higher. How about those that they want to they have been going down a lot? Will they have a rebound here? So let's take a look into some of all these blue chips here. What I find is that some of the blue chips, they are showing signs that the demand coming in at the bottom, and some is also having sign that the demand coming in starting to mark the price up higher. Okay, so not this big up, basically just one day down. So it seems like there will be more down coming onwards. Next one, seesaw zone is not the wait. Let's check. Demand is in, but doesn't show that the demand that comes in to mark the price up higher. Okay, some of these blue chip that they show some sign that they are having a pause and price having some demand coming at not this one. But what I see here today is this where is it? This one here. Although it's dropped, it goes down 9 cents. It seems like very horrible. So if you look into the day charts of it, you'll be worried. Okay, down price with high volume. So you might think that, oh my god, selling pressure is high. But this is where you need to look into details, where when you look into or you learn about the traditional or the common technical analysis, they won't tell you about this. Okay, they won't ask you to look into 5-minute chart, because this 5-minute chart is from myself. When I look into Malaysian market, then I need to look into this. Of course, if you see my US market trade also, I do look into it as well. But all of this in the 5-minute charts, it shows us the clue of the big boys. Are they coming back in? Are they going to mark the price up higher? All these are showing up. Okay, so this is why we can actually look into things that are much more precise than the rest of it, and timing the market, whether is it going to have a rebound or market crash, much more better. Okay, so you guys can look into our social media. You can find things from there, so it's much easier. Is it this one? No, not this one. Some of it, like this one also, they are showing some sign that the demand in marking the price up higher. So some sign that is showing up that there will be a rebound. So most likely tomorrow KLCI would not be that bad. Most likely they will have a little bit of rebound from it. But I don't see, because why I say is not that bad instead of having a price up or KLCI move up higher is because I only see a few stocks that show some sign that they have the intention to mark the price up higher. The rest of it doesn't really show much. So that's why it's not going to be that good, but you need to know what kind of stocks to look into it. So far, overall, what we need to prepare for the upcoming weeks, we need to prepare to look for any rebound. Okay, you need to know when is the rebound coming. So the rebound, I'm not saying that you need to look at like the what you call that. I'm not saying that you need to look at the support, draw the support line and previous support line. I personally, I don't look into that. The reason is because look into this price drop over here. There should be a lot of people like saying like, oh, okay, that time when it's before the price drop, at this point over here, they will say like things like, oh, the support, the next support will be somewhere around here. If let's say this support doesn't support, then you need to look for this support over here, second support, then this is the third support, and then the fourth support, and then the fifth support. Too near to be a fifth support. Maybe at this gap up turn support, and then or the previous low support, and then later on you find that after a few months the price, all this support has been broken. Okay, why? The reason is very simple. The big boys don't accumulate on the way up, so you can't use this previous low or previous high as a support. Why the price goes down lower is because the big boys are selling and taking profit. They are selling, and then they see no buyers. They mark the price up higher, and then they sell again. Mark the price up higher, and then they sell again. So, can you use this support as the current support? Basically, it doesn't make sense to me. So, I'm not sure whether it makes sense to you, but you try to think about it. So, that's why we don't... The way we look for support, or the way we look for the bottom, I don't like to call it support. I prefer to call it like bottom. The way we look at the bottom is very different. So we look into the 5-minute charts, see whether the big boys have the intention to mark the price up higher, the demand coming in. Okay, so like I say, if let's say you are a person who would like to look into blue chip stocks, so keep an eye into all these blue chip stocks and see where is the bottom, and then at that time when they're showing some sign, you can start to look into it a bit. Okay, but of course, not all the blue chip you can go for long term, because some of the blue chip they don't go up in the long term. Some of them they go down in the long term. So you need to choose the stocks wisely. All right. So you can see like sometimes it's like this. It goes up, but then right now is it like keep on going down and lower. So choose wisely. Okay. So but for myself, I have a few long-term stocks that I look into it, but I'm not going to share it over here. So if you're a person who like to look into long-term and you don't mind investing into some of the long-term stocks that is higher value, so you can text me and ask me about it. Okay, PM me and ask. Of course, the best way is you can have open a trading account with me. Then I'm free to share to you guys, because that is I can license to do that. Okay, so like for example Nestle, a lot of people have been talking about like 120, but of course I'm not going to share Nestle. But Nestle, a lot of people have been complaining about 100 over ringgit, 120 over ringgit. Before that, when it was at 50 over ringgit, a lot of people talking about 50 over ringgit, very expensive. It's just like property price. Okay, last time we were talking about very expensive, but the difference is that property price is because of our income and all those things, so that's why it's not able to support to buy that. But for stocks wise, you can buy for one lot easily. You can just buy like 1,000 over ringgit, right? Yeah, 1,000 over ringgit. Buy small a bit, but you see along the way, I have a client who bought at 50 over ringgit. I think about 57 plus. So look at it right now, it's about 127. But I wouldn't talk about this anymore, because no matter how a lot of people would say like, oh, Nestle is so expensive, how to buy like Kelvin, and have anything cheaper? Not cheaper, yes we have, but you can't go for long term. You seldom see any of the stocks that is cheap, but then it will move up to have this kind of price capital gain like this. Okay, so next thing you need to look into it, you need to catch the bottom of all this price down. Okay, so after you catch all the bottom of this price down, then you can free to go for long term or anything of it. But at the moment over here, if you're a short-term trader, then we can look into all these stocks that they are doing churning, attracting buyers over here. Then we can look into it, or maybe some of these stocks that they shows any of the rebound that is coming. Then it's free to go for any of the short-term rebound trades or continuation of price up to trade on that. Okay, so market isn't that bad. You can't say like, oh, KLSE is down, then the overall market is down. Just that you need to know which one to choose and which one to trade. Okay, and how do you know that? You can't use traditional technical analysis where like the chart pattern or the indicators to look into it, because all those are too late. Because like if the big boys, they want to attract you to come in, so what they will do is that they know you know about technical analysis. So what they do is they can do a breakout. So when you see the breakout, you jump into it and then you get caught inside. Then that's where they sell the price down. So that's why you always get caught at the high side. Why? When you break out at the high side, the price start to retrace. That's too late. Okay, look at all this. If let's say you just base on the, oh, not this one. I remember there's one. They have a breakout. Not this. I forgot which one is it. I don't think it's showing up in here right now. Let's see. Is it this or this one? You can see. If you look into this, then it is triangle breakout. So triangle breakout, as usual, retail investor will see this high volume resistance breakout. So they won't enter in the morning because they're afraid that later on the price got pressed back down lower. So at the end of the day, they maintain above this resistance with high volume. That's where the retail investors come in. But of course, retail investor will not buy at the high side. So usually what we do, a lot of us, we have this bad habit of parking our, where's the arrow? I need the arrow. Parking our buy orders at the lower point because we want to buy it cheaper, because you don't want to buy it at a high price. You don't want to get caught at the high side like this. So you just fall into a big boys trap. How? Because they know that you park at the lower point. That's where they throw the price down lower to you so that you get caught inside. Okay, so that's how they take profit, and they are happy and you are happy because you are able to buy at a cheaper price. Okay, so that's how it works. How this resistance breakout and trick you in to get caught inside. So that's why I say in the current market, if you're thinking of looking into any of the rebound or bottom or any chance of trading for all this continuation of price moving up higher, then you need to attend our training course over here. So it's developed for Malaysian market. So this is specially developed for it. So it's not like a plug and play from somewhere else that you can find in the US market, plug and play into Malaysian market. So it doesn't work. Okay, it's what you call that, the regulation is different, market size is different, everything is different, so you can now apply into it. So you can see the portfolio of round and search, you can see constantly outperform the KLSE, IS cap and ACE market. April time, a lot of people still staying away from the market, very shaky, not so sure about it. So we are able to make profit out of it with a lot of day trades. So like I say, day trade and short-term trading. So you can see we do a lot of trades during April time. Okay, because there are opportunities. So when the price is going down, so the market is going down. So you can see during May time, we have not much of a trade compared to the April time. The reason is because market is coming down. So that's why before 20th of May, everything got out from it, but we're still able to have the profit. So June time is where the market crashed. So we only come back like almost at the end of the week. So, but we still make a little bit of losses, but we are able to protect the profit that we make on May and April. This is where a lot of traders, they are not able to do it. Why? When market down, they are not alert. Not to say not alert, not informed, because technical analyst doesn't tell you like, oh, market is going down right now. They tell you the market is going down right now, it's going crashing right now, when the market is crashing. So they won't tell you before that. So how do we see this? When we see a lot of big boys are doing a lot of aggressive pump and dump going on in the price and volume, so we know that, okay, time is not right, so get out everything. Okay, so we come back in around end of June, then July profit comes back again. So during that 4 months, about 11/1000 here. So overall 5 years is about 30% per year. It depends on the market. So constantly outperform the market here. Okay, so you can see we can go for pro trader, semi-pro, short-term trading. So the next training course will be on next week. Okay, next week. This week. Oh, we're starting from this week. Okay, so is it this week? So it's the first week of October. All right, so you can sign up one full course at 4089, or you can go for subscription for 689 per month up to 7 months here. Okay, so basically that's my sharing over here, and I hope you guys know what to do next in the market. And if you are interested to look into this, do let us know, PM us or WhatsApp us or whatever. You can contact to us or leave your name, okay, comment in the comment section so that we know, then we can reply to you and send you the link over there. Okay, if I'm not mistaken, the link is in the description box. So go to the description box, click on the link and look into our training course here. All right, so that's about it here today. So thank you very much for joining, and I'll see you guys again on Sunday. And right now, market, be prepared for any of the rebound. So make sure you have the bullets into it, and also make sure you know how to look into it. Okay, see you guys next time. Bye bye.
Wrong and search. True traders react to the market.